Warren Buffett once said, "If you don't find a way to make money while you sleep, you will work until you die." That is why I've been thinking of going into investment since then. Before we continue, kindly give us a thumbs up and also hit the subscribe button. And you see that bell icon? Hit that too to get notified of our other interesting videos. So, it's no more news that Warren Buffett's company, Berkshire Hathaway, sold its entire stake in Costco Wholesale Corp., a business that both Warren Buffett and Charlie Munger have praised consistently over the past couple of decades. That stake alone is worth $1.3 billion. Not only that, but Buffett also sold some stakes that I will be discussing in this video. But come to think of it, that is a whopping $1.3 billion. While Costco investment only represents 7% of Berkshire Hathaway's stock portfolio, there is still a lot we can learn by looking into Costco as a business and the reasons why Berkshire Hathaway sold out of that position. Warren Buffett, for those who don't know him, is an American investor, business tycoon, philanthropist, and the chairman and CEO of Berkshire Hathaway. Warren Buffett is one of the most successful investors in the world and has a net worth of over $100.6 billion as of April 2021, making him the world's seventh wealthiest person. With that kind of riches, I wouldn't bother about stakes anymore, but that is the typical life of an investor. They keep investing. For the sake of the business enthusiast, let's do a brief on Warren Buffett. Warren Buffett was born in Omaha, Nebraska. He developed an interest in business and investment when he was young. Buffett went on to graduate from Columbia Business School, where he molded his investment philosophy around the concept of value investing. He also attended the New York Institute of Finance to focus his economic background and soon after began various business partnerships, including one with Graham. He created Buffett Partnership Ltd. In 1956, and his firm eventually acquired a textile manufacturing firm called Berkshire Hathaway, assuming its name to create a diversified holding company. In 1978, Charlie Munger joined Buffett as vice chairman. Buffett has been the chairman and largest shareholder of Berkshire Hathaway since 1970. You might have been hearing or seeing the alias Oracle or Sage of Omaha, but not to worry, that is the alias of one of the most profound investors, Warren Buffett. Buffett is known for his adherence to value investing and his frugality despite his immense wealth. It's no news that the U.S. Securities and Exchange Commission requires all investment managers with more than $100 million in assets to file a Form 13F quarterly to disclose any changes in share ownership. These filings add an important level of transparency to the stock market and give Buffettologists a chance to get a heads on what the greatest investor is thinking. When Buffett starts a new stake in some company or adds to an existing one, investors read into that as a vote of confidence. But if he pairs his holdings in a stock, it can spark investors to rethink their investments. Buffett recently selling his stocks needs to be discussed then, right? Warren Buffett invested in Costco through Berkshire Hathaway for the first time in the year 2000, right after the recession, which ended up pushing the stock down about 35%, and according to a 2002 SEC filing, Berkshire held 5.6 million shares with a value of $182 million. And at the time, this Costco investment was really no surprise to anybody in terms of the timing. It was during a recession, which is when Warren Buffett and Berkshire Hathaway typically like to load up the truck and invest in a lot of great businesses while they're suffering from the short term from the recession. But it's also no surprise that they invested in Costco because Charlie Munger, Warren Buffett's business partner, has been on the board of directors of Costco since 1997 and has also had a significant stake in the business personally. So he has personal wealth invested in the business. It makes perfect sense to see Berkshire Hathaway also open a position in the company. And it's also no surprise that both Warren Buffett and Charlie Munger love this business because it meets many of the requirements that the two investors talk about in terms of principles and philosophies to follow when trying to identify really sound long-term investments. And on another note, I farted in an Apple store, and everyone got pissed at me. It's not my fault they don't have windows. Costco's business does fit within what Buffett wants and preaches, a relatively simple business model. The company has a physical wholesale location. Costco also operates a two-step retail business that skips out on the final step of the chain, which is a retail store. Their products are shipped directly to warehouses. Customers require a yearly membership to access these warehouses. Products are sold at low cost and in high quantities. Their product lines are short, so they have a limited variety of certain products in terms of colors. And that allows them to reduce unsold inventory and increase the speed of inventory turnover, which both contribute to reducing costs. And these warehouses are primarily located in the US and Canada. Also, the company has had success expanding internationally, particularly in China. But why is Warren Buffett so healthy for his age? Probably through value investing, I guess. We also need to look at the people who are running the business. And first of all, make sure that you trust them and their values align with yours. Then, the next factor is looking at their skill at investing within the business and managing debt to low-level management. All these meet Buffett's criteria, and why he sold is what we don't understand. Costco is expanding internationally. They recently opened their first store in China, and they had 130,900 signups on the first day, according to a reliable source, and these people pay about $100 per year or $70 per year or something in order to have a membership. The profit margins are increasing. Their online sales are up, their sales at their existing stores are up, and they're continuing to expand in China and into other countries as well. But did you hear about the guy who was looking at luxury cars during his child's birth? He was having a midwife crisis. But regardless of all of that, I think there's only one thing left that could be the reason why Warren Buffett and Berkshire Hathaway are selling out of Costco. And that could be the price that you have to pay to make an investment in Costco. And in my personal opinion, Costco's stock price has gotten way too high. Also, Warren Buffett's recent decision to sell all of his airline stocks has attracted lots of attention. Especially all these companies have seen their shares rally considerably since the sale. But as I said earlier, rather than attacking these moves, we should view them as case studies and insights into the Oracle of Omaha's investment strategy. Why Buffett sells his stocks. The Oracle himself at the 2002 Berkshire Hathaway annual meeting, Buffett outlined the two main reasons he would sell a stock. The first explanation he gave was quite simple, that when a better idea comes along, it makes sense to liquidate a holding that appears to be a less attractive opportunity. Quote, "We would sell if we needed money for something else, but that has not been the problem the last 10 or 15 years. 40 years ago, my sales were all because I found something that I liked even better. I hated to sell what I sold, but I also didn't want to borrow money, so I would reluctantly sell something that I thought was terribly cheap to buy something that was even cheaper. Those were the times when I had more ideas than money. Now I've got more money than ideas, and that's a different equation." Warren Buffett, self-made billionaire, holds an annual conference for aspiring entrepreneurs. So, typically, when they go to lunch during the conference, they eat from the Buffett buffet. The other reason why Buffett sold his stocks, according to a statement in 2002, was that the economic characteristics of the business had changed. He said, "We sell really when we think we're reevaluating the economic characteristics of the business. We probably had one view of the long-term competitive advantage of the company at the time we bought it, and we may have modified that. That doesn't mean that we think the company is going into some disastrous period or anything like that." So, I think rather than criticizing Buffett's decision to sell any stock as many have done, we should instead question what he thinks has changed with the company. Now tell me if you've heard this one. An investment banker was getting married. During the wedding, the wife vomited. Husband: "What happened?" Wife: "Capital gains arising out of a previous investment." Husband: "You cheated me?" Wife: "Well, you should know, mutual fund investments are subject to market risks." For example, toward the end of last year, Berkshire's 13F revealed the group had been selling part of its significant stake in Wells Fargo. Buffett had been reducing the holding gradually over the past several years to keep Berkshire's ownership stake below the critical 10% level. However, selling accelerated in the fourth quarter, although it didn't continue in the first quarter of 2020. So, what pushed him to sell? It could have been the fact that the bank's asset cap restricts its competitive advantage of size. It could also have been the fact that the bank's reputation, which was once sector leading, has been significantly damaged by the false account scandal. Did you know that Ireland is a good investment platform? Because its capital is Dublin. While the reasons I gave seem likely, Buffett has not explained why he decided to sell his stocks. It is just speculation at this stage. And as Warren Buffett would say, the only way to improve your investment strategy is to develop and learn from others, not just mindlessly copy the actions of billionaires. We need to understand the thinking behind the decision. That's the only way to improve over the long term. Doing something just because a billionaire or successful trader did can be a fast way to lose a lot of money. Buying something you don't understand can lead to significant losses if the trade goes bad. Looking back at Buffett's investment decisions is a great way to build an understanding of a successful investment strategy, but with full understanding. While you wasted time listening to this particular joke, Warren Buffett has already made another, probably $1 million. So, guys, it's practically impossible to know the actual reason behind the sale of the stocks until we get an interview or a statement from Charlie Munger or Warren Buffett. And we all have to just wait for that. So, that will be all for today, guys. I would also love to continue the discussion and have your thoughts about the sales from Warren Buffett and Berkshire Hathaway down in the comments section below. Also, if you want to stay up to date with all of my new videos coming out, then make sure you subscribe and hit that notification bell icon next to the subscription button. Turn all of it on, and that way you'll be notified whenever a new video is released. Do have a great time. Till next time, bye.